Okay, good afternoon, everyone. I think we'll just get started. There's a few of you coming in, but we'll get going. So welcome to the Fintech webinar, preparing you for the future of financial services. I'll just start with a little bit of housekeeping, just to set the scene. So this session is being recorded. As standard, we'll be releasing this webinar at some stage next week. But just be aware that we are recording the session. We're going to be covering a lot of different subjects today, but if you have any questions, please do use the Q&A box for those questions, and we'll be answering those as we go through. A quick introduction to today's hosts. We're very lucky to be joined today by both Pinar and Nia. These are both leading authorities in the world of fintech, algorithmic trading, AI and finance, open banking and market design. Pinar is also serving as the director for the Oxford Future of Finance and Technology FinTech Institute. So we're very lucky to have you both here. And I'm just on the end there. I'm Alex. I'm part of the sales team here at Executive Education. So hello from all of us. I'll hand over now to Pinar to take us on. So Pinar.
Thank you so much, Alex, and hello everyone. Good afternoon, good evening, or good morning, depending on where you are. And I'm really excited to be talking to you about some of the new research that we're doing at Oxford, which is always what gets translated into the FinTech course. As Alex said, I'm a professor of entrepreneurship and innovation at Oxford, and I'm also the founder and director of the Future of Finance and Technology Research Initiative. Let me see if I can move the slides. Yes, I can. So this initiative that you see in front of you deals with a lot of issues that are at the intersection of technology and finance. And in particular, some of the current topics that we're dealing with, we have a large study going on the adoption of AI by financial institutions. We are conducting with the Financial Conduct Authority the next level after open banking, which is open finance models from around the world. And we have studies on the implementation of financial literacy and financial wellness, financial education initiatives around the world and their effectiveness. So lots of research going on, and we publish the results on that website periodically. So please do follow. What I want to talk to you about are a few kind of trendy topics that are part of the fintech world right now. And the first one is the role of AI in finance, and in particular, how we can see the way that AI is reshaping the financial sector, both in terms of the way that financial services are delivered, but also in terms of the competition between old and new players. And within that, one of the first things to say is to look at what AI does to financial services. And it doesn't just make financial services faster and cheaper because you're using machines rather than humans to, for instance, analyze documents and whether these are loan applications or whether these are market trends. But it also has the potential to make financial products better. And by better, we mean based on more data, with less human error, and perhaps also, if you use it right, if you go beyond cost reduction, by designing services that are personalized to everyone. So rather than putting consumers into different buckets and saying, okay, so if you're in this bucket, we can serve you, whereas, oh, you're just a little bit too far out, either your income is not high enough or your residency is a bit weird. You're half a year, you're here, half a year, you're there. And so people who fall kind of out of these standard buckets now have a chance to be served because products can be designed just for them, and the cost of designing products is significantly lower compared to before. Let's give some examples just to bring that home. The first one that I want to give is an Australian company called Wiser. This is a company that I had a chance to study while I was spending some time in Australia. And one of the things that stands out about this company is the way that they're thinking about financial loans. So these will be individual loans or business loans, that what they do is they are connecting to your current account And that is a requirement for getting a loan. And then they're analyzing your spending and your ability to earn money and giving you suggestions in order to make your loans cheaper. So, for instance, if they realize that you're spending a lot of money on something and you could easily cut that, they make suggestions, which we call behavioral nudging. By analyzing data, fintech has the ability to nudge people towards the right behavior. But of course, we have to, and you know, I'll have a slide towards the end of my presentation to show you that behavior nudging can also turn to a really dark side if organizations can nudge our behavior towards more risky or towards more irresponsible. So there's lots to be regulated in that space. Another type of fintech that is becoming popular with Gen AI now going to the next generation, which is agentic AI, is that good news for financial institutions that their data doesn't have to be kind of uploaded onto any public servers in order for agents to learn from that data. Agentic AI can allow, and this is one company that helps organizations do that. Agentic AI can help organizations build their own AI agents and that work just with their data, whether they are previously trained on external data or not. They can work with their own data on-prem rather than taking that data out. So this is good news also. And so Gen AI was kind of already exciting news after predictive AI. And after Gen AI came agentic AI, which is when we build agents and these can be in-house and helping just us, which takes away a lot of the privacy and compliance concerns. And then the next level is what we call agentic flow, when we have more than one agent checking so the second or the third agent checking the work of the other agents, which really helps with accuracy and against hallucination. So agentic flow is then the next level, which a lot of organizations are thinking about. A great example for me of generative AI and the way that it can help in financial services is the company Rise, which serves immigrants in the Middle East who are of low income. So these would be, for instance, your dishwashers in restaurants and your drivers and your window cleaners and people who are coming from their home countries for low wage jobs in order to send money to their homes because they don't have an alternative. And what this company does is it gives them financial education and accounts. And the way it does that is by training chatbots in the top languages. For instance, it will be Tagalog and Persian and Turkish and various dialects from India, in order to make sure that these people have a chance to be understood by chatbots and then to get financial services, and that they're not limited to cash and having to send cash across countries. So the potential of generative AI for financial inclusion is immense, and I personally am very excited about that. Of course, it's important to say that AI doesn't just transform access in finance. It also can lead to inclusion in healthcare. It can lead to inclusion in education, and these are all great news about AI. One of the studies that we're currently finishing at Oxford is on the AI adoption by large financial institutions. And I will just give you some highlights from that. One of the things that stood out from that study is the importance of the digital architecture of the institution. And the good news is that, there's lots of talk about digital transformation. Banks are spending kind of billions on digital transformation. But the good news about AI is that you don't have to wait until your digital transformation journey is complete in order to adopt AI. You can start adopting AI in different ways based on where in that journey you are. And in particular, I'll show this to you kind of almost as a flash, but we are building a kind of a sequential model for certain decisions that you can make about AI. For instance, which initiatives do you select? Is it a kind of a part of a larger program, which is in that first line, or whether it's a point solution for cost reduction somewhere? how you govern the AI initiatives, whether you do it through a centralized department or federated each department on their own. And the goal of the AI, which is the third line here, the goal of the AI initiative, which can be efficiency, or in other words, cost reduction versus quality enhancement, which is much more the job of generative AI. So we're building a framework based on this, which can be adopted by institutions in order to adopt AI differently based on where in the digital transformation journey they are. The final topic, which is always relevant, is the kind of the regulation of big tech and AI. And in particular, the point to emphasize here is that with AI, we're seeing an even greater power of big tech within finance. The role of data in competition has been there for decades. This Economist cover is almost 10 years old now, 9 years old, and yet the world hasn't changed. Maybe some of the players are different, although you'll notice that many of these players on the cover are still kind of the front runners of kind of platform power. But what's important to realize is that because data allows organizations to make their algorithms smarter, these organizations have a huge advantage when it comes to getting into finance, and they understand their consumers in many different ways. And this is also why many of these organizations are already in payments, right? Meta has one of the largest numbers of e-money licenses to allow peer-to-peer payments in rural parts of the world, while Google invests into neobanks around the world. And these are all data plays which we need to realize. And the power of big tech and their ability to absorb banking into their services will be a trend that will continue into the future, perhaps less more slowly in the West compared to the East of the world, based on some of the stricter regulations. But this is a trend that will not go away, and we will only get closer to there. And as promised, one of the things that I wanted to show you is that it's very important to regulate AI in finance, and it can also be quite difficult to regulate. And just to show you the dark side of that behavioral nudging and what it can do to people, let me leave with this particular piece of news from a few years back, where a fintech investment app caused the death of a young individual because of the way that the algorithm was always giving kind of positive motivation for more investments, whereas in the process they were actually destroying a person's financial history. So it's incredibly important to think about how regulation has to catch the way that algorithms are nudging people towards certain behaviors, and take measures on that, not just at the moment of licensing, but continuously. This is all that I wanted to tell you today. These topics are covered in the fintech courses that we provide, and there's much more research coming every day. So thank you so much for listening, and please stay tuned.
Over to you, Nina, please.
Yeah, thank you, Alex, and thank you, Pinar. And hi, everyone. I'm Vulkan. I'm co-director of this program with Pinar. In fact, I did the original program in 2016. We were the first fintech online program actually in the world, and so that's our claim to fame. And my throat isn't great, so I'm not going to speak for too long, because I've been telling these guys I just gave a 3-hour lecture and finished about 20 minutes ago, so I'm a little bit. Yeah. So I said we've created an original program, and it wasn't, as I said, a fluke. I mean, England, the UK moved first with fintech. It was a direct consequence of the government action. This is Osborne, who was then the Chancellor, who clearly forced the regulator, the FCA, to encourage innovation in finance, and other countries said, okay, well, let's see how that happens and how that goes before we moved on. as it happened in the UK, as you may know, Oxford kind of punches above its weight when it comes to financial services. And a lot of the people who were involved in the original fintech businesses were either our students or our colleagues or our friends. So we had a very good insight into it. And of course, a lot of change. And the course that Pinar and I put together is a very changed and updated version of the original course that we had. But I think some of the principles have remained the same. And I hope that if you take this program, that you will see how it comes through. And in fact, Pinar did emphasize that kind of balance, if you like, between innovation and risk, that it's true everywhere in our life, but even more so in finance, because when it comes to our money, we expect it to be safe. It's a big thing. That's why we don't see runs on banks very often. And that's why the government really works very hard to regulate these things. So the whole idea of innovation in finance was, so you can think about it that finance was one of the last industries to be affected by tech because of regulation. And as I said, around 2012, when the UK government sort of encouraged that, we've seen that experiment happening. And largely, it has been a good experiment. It's been a good experiment because fintech has happened and it didn't seem to introduce new risk. We didn't see many of these businesses cheating customers or taking advantage of the technology in a way that some of these businesses didn't make it, of course, and some of them didn't do that well. But largely, it's been good, and evidence of that has been copied around the world. But again, Pinar did the work for me. There's new risks coming from this adoption of these technologies and new risks associated with AI. The FCA, who we work closely with, are very concerned about that, and they kind of are trying to learn about these things. They have changed dramatically. The FCA, when I started, were a bunch of lawyers, and now they have lots and lots of quantitative people, and they're trying to keep on top of these things. All I can say is that if you take this program, hopefully you will get sort of the insight and, if you like, the framework and how to think about finance, risk, regulation, how it all fits together, and how we can create systems that work, like Pinar said, for the benefit of customers, in particular for those who have been failed by the old financial businesses. So that's all for me. Thank you.
Thank you, Nia. So, as I say, do let us know if there are any questions. There's nothing coming in so far, but if you have any questions for the panel, please do post them now. Otherwise, we'll move on. No, it must have been very clear because there's no questions. Okay. Oh, no, there's something coming in now from Yenny. Do we see some true challenges in the arena, not just challenge bankers, but real change?
Well, I think the question could be taken anywhere. I think challengers, yes, and we are now at a stage in fintech where some of these challengers have made it. They've become our new go-to loan providers, mortgage providers, kind of neobanks. Name a financial kind of sector, and there will be fintechs that are starting to dominate that and starting to provide real competition to banks. And what this is showing, and there's interesting data coming from the US that in 2025, 70% of all new mortgages have not come from large banks and mortgage providers. So fintechs, and some of them AI-based, some of them less so, but new players and kind of alternative players are providing services and starting to really make a change. And of course, it also depends on the willingness of people to interact with new players. In loans, for instance, we know that when people need money, they're a lot more willing to go with new players because they're receiving money rather than giving it. But in investments, people are usually a little bit more a little bit more conservative, let's say. But overall, I would say that there's the fintech competition is starting to lead to systemic change. And my personal view is that in 10 years or 20 years, banks will seriously question their right to exist in this world.
Brilliant. Thank you, Pinar. There's a few more appearing in both streams, so apologies I straddle here. We'll go with two ones now. So the first one is where can we access the research mentioned? And then there's a second question around liking to ask the panel if any upcoming course or research study are you planning for GCC? So research first, where can they access the research?
The research that we write is available on the Oxford Future of Finance and Technology Initiative website, both in terms of white papers and news of academic papers. And even if you see an academic paper, don't be afraid. You can just ignore all the academic stuff at the beginning and at the very end, and just take the middle part, and you will get basically what you need. One of the most recent papers that we finished is going to be published soon. It's not available yet, but that one is going to be on the platformization of finance, and in particular, whether new players are thinking more in terms of platforms and whether this is having an effect on big banks. So stay tuned for that. I can't really put it online before the journal does, but as soon as they do, we will provide it.
Brilliant, thank you. There's another question here. Does the course cover cryptocurrencies?
I mean, a little bit. We have specific courses on it as well. Maybe Alex, you're going to talk at the end, because also people ask about can they find out the syllabus. You're going to say a little bit at the end where they can find out a bit more about this course and the other courses. So Alex will give you some pointers, and then you can see, because we have a variety of courses, and you can see exactly week by week what they do.
Okay.
I mean, there's lots and lots of questions. You want me to do the one on hallucinations? I mean, it's really the questions come thick and fast. I don't know if we'll be able to do all of them, Alex. You look like you're as overwhelmed as me. Yeah.
We'll do a few. Do jump in here if you've seen one.
Yeah, I mean, Pinar has mentioned already hallucination is a really big question. I mean, in general, the use of AI in finance is presenting some new challenges. Well, let me say specifically LLMs, okay? Specifically these types of models where they are stochastic, so they give slightly different answers at different times. That's not consistent with financial regulation, where you have to give the same answer to the same question every time you've asked that. And it's also that they do hallucinate sometimes. So the technology companies are spending a lot of time and effort, and Pinar mentioned some of it, through the agents checking each other to try and deal with that. Lots of the startups come up with their own different solution. It's something I've been involved with a number of banks, specifically around it. The short answer is it's not resolved yet. It's not resolved yet, and that's why we're still sort of checking around that. And but it's clearly is an issue that people are thinking about, and it's changing as we speak. I mean, very broad, without getting too much into details. I worked with companies and with banks that were able to train the data in such a way that really controlled the hallucination. But in order to do that, the model or the type of answers became so simple that you almost like didn't need an LLM for that. So it is definitely something that everybody is thinking of now.
Perhaps just to add to that, just like I said in my mini lecture, agentic flow actually can check for hallucination, right? So like if you have another agent checking the work of one agent and looking at what data that work is based on, that already helps to a certain extent.
Thank you. So there's another one here. Could the disappearance of visible banking actually increase seismic risk, since customers may not know who is handling their money?
It's an interesting question. I think that the chance that something goes wrong because we don't know who's handling our money is actually quite low, because These institutions cannot get a license if there's no checks and balances in terms of where the money is, and particularly with handling of money. The FCA and similar regulators around the world are really, really strict. And so I actually am more worried about whether, let's say, people using ChatGPT for financial advice than whether agents are going to do something wrong with my money.
I agree.
I mean, I'm now sifting through the chat. There's even more in here. Uh,
Why don't you just pick a couple, Alex, and then
yeah,
we
where to
we're
start?
not going to be able to do this. So I think we need to,
Uh, yeah,
yeah.
so there's an interesting one. How do we see AI playing a role in private equity? Meet you want to get into?
Yeah, I'm happy to talk about that. We have a lot of it in the business school. In fact, some of it is in on the website that Pinar mentioned, but also on the private equity institutes that we run also in SBS. So if you look at SBS website that way, you can find it. And there is a lot of research. Of course, private equity are using it in different ways and in different stages. And some of them are actually using it. There's a few projects when they're using it to actually make decisions. It's, they clearly are looking at it, and it's definitely affecting the juniors in private equity, which is very unfortunate for our undergraduate students who are hoping to work in that industry. But it's still ongoing. And I really recommend that you look at some of the work of my colleagues in the Private Equity Institute and Said, who are specifically looking at that and surveying it.
Thanks, Nia. So we'll pull out one more, I think, before we go on to the next slide. So there's one around as AI systems increasingly consume open finance data, how do we ensure explainability and auditability, especially in credit decisioning or risk scoring?
Again, I'm happy if to have a go. I mean, this is actually depending on the jurisdiction. So we see different regulation around it. The Europeans have very strict regulations on it. So, for example, in Europe, you have what we call the right to human. So you have the right to sort of challenge any decisions made on you by AI and request that the human would look at it. It's different in the US. So it's slightly. Actually, we're beginning to really see differences now around the adoption of AI between Europe, who's very consumer centric, and to the US, but it's a bit more neutral, and of course China. So I think it is, and it's going to become a bigger thing in terms of the differences, as I said, between them. But it's fast growing. Explainability, for those of you who don't know, is some kind of process that you put on top of the black box, and it tells you what the black box is doing. And that's something regulators are really using a lot to try and sort of understand these machine learning algorithms and have be able to explain how they made the decisions that they have made around credit.
Thank you, Nia. So we have one more slide, just with a little more info and sort of next steps. Amy, are you okay to bring that last slide back up? So this is essentially just a little bit of info regarding the next FinTech course. So it's running on the 4th of May. Rather, the deadline is 4th of May. We're starting on the 6th of May. It's £2,200 up front to join that. If you'd like to enroll, there's the barcode at the bottom there for doing so. If you'd like to book a call actually to discuss that course further and discuss other courses that relate to this content, such as algorithmic trading and others, please do that. It's worth noting as well that we do offer a fairly competitive corporate discount for block bookings, and that can be anything from three places or more for anyone joining. So if you have, as well as just for yourself, if you're looking to roll these courses out to your organization, please let us know, and we'll be happy to organize a wider discount for you. So with that, I'll bring the session to a close, unless anyone would like to jump in on anything else. I think that was I'll just say thank you to our wonderful panel today. Thank you all for joining. Some great questions in there, some great discussions. Do write to us if you have any further concerns, or indeed, as I say, book a call, and we'll be happy to take any further questions. Okay, so thank you all for coming.
Thanks, everyone. See you later.
Bye. Bye.